Good morning, ladies and gentlemen. Obviously, there's someone famous on the stage. I'm not exactly sure. I'm definitely sure it's not me. So that's great. I do want to take this opportunity again. Thank you all for coming. If you're that interested in whomever you're taking a picture of, we will have a Q&A session during the panel. You are the sixth panelist because there's 5 members up here. So just remember, any questions you want to ask, just ask, and we will address them right then and there. So please feel free to talk personally to the man you're taking a picture of, and the others, of course. So we're going to start the commodity panel as of now, and sir, it is all yours.
Good morning, everyone. Thank you very much, Mr. MC, for the introduction. I don't think I'm the famous person. I'm Steve Edge, principal of AsiaETrading.com, a news and portal for electronic trading market structure in Asia. I've been invited to moderate this panel on commodities. Thanks to IFX Expo for the opportunity. I think we should just get started and introduce the panelists, and I'll let them do that themselves. See?
Good morning, everyone. Thank you very much for making up to this panel today. My name is Mohsin Jamil. I'm the founder and CEO of TradeNext Limited. We are based in London, headquartered in London. We are regulated by the Financial Service Authority. Act as an OTC broker and provide FX and CFD as an asset classes. At the same time, we also have a presence in India. We have a huge presence in India. I can see from here there's so many people turned up for this conference. In India, we are a member of a multi-commodity exchange, and we also have a non-banking license. We are regulated by the Reserve Bank of India. But the term non-banking license means that we are not categorized as a bank, but still we are a bank because the type of license we hold, we are not allowed to open saving account or current account, but we act as a bank. We can take the deposit, we can give loans, and we can finance infrastructure loans, all stuff we can do under that particular license. On top of that, we also do a lot of different businesses in India. One of them is a mobile technology because we look India as a very micro level. And I think there's a huge opportunity in India in terms of business. And what we have come across in India was to reach the mass audience, we need to have a distribution channel in India. And I think physical distribution channel in India has become quite a bit of a problem. So we thought, let's come up with a solution. And mobile these days has become so popular, so we thought, let's target mobile, and we come up with a software which connects all the which connects to a bank account, and at the moment mobile is relatively very cheap in India. So every single person in India has got a mobile. So the future plan is to connect the mass audience through the mobile technology. There's a lot of banks offering the mobile software in India, but the way we different from other bank is our technology help all the clients not only to do the transaction through the mobile, but they can withdraw the money from the cash machine without putting a debit and credit card. So, but we are fairly a very new company. This concept has been originated by an Indian entrepreneur, Mr. Jagjit Singh, and been reinforced by me, and we started this company in 2010. Thank you.
Good morning, ladies and gentlemen, and a special namaste to so many Indians I see here. Friends, I am the CMD of SMC Comtrade Limited. SMC Group was set up in 1992, and we are member of all the commodity exchanges, all the equity exchanges, and all currency exchanges of India. We have close to 2,500 offices in India. We are present in around 500 cities of the country. We are also member of Dubai Gold and Commodity Exchange. Around 700,000 investors deal through us. We are almost into all the financial services under one roof, be it investment banking, be it broking in equity, commodity and currencies, be it depository participants, insurance broking, wealth management, portfolio management, non-banking financial services, or proprietary arbitrage. So, and as I said, we are also member of Dubai Gold and Commodity Exchange. So practically almost all the financial services are provided by us. We have been rated as #1 equity broker of India, #1 derivative broker of India, #1 currency broker of India for last 3-4 years by Bloomberg, by UTV, by Dun & Bradstreet, by Bombay Stock Exchange. and it is my real pleasure to be here because I believe the subject commodity trading has gained immense importance in last 10 years since the relaunch of commodities futures in India. The success of commodity trading, if it has to be seen, it has to be seen in India. In last 10 years, Indian commodity future market has grown by a average rate of 85% annually. If right from 2003 to 2012, the average annual growth has been 85% since beginning. And since 2007, our volume have increased by almost 38%. So in the initial phases, the growth was tremendous, manifold, and even in last, from 2007 to 2012, the growth has been almost 35%. So it is really a success story, and MCX Exchange has today emerged as the third largest exchange of the world in terms of number of trades. And almost 111 commodities are being traded now in India on exchange platform. Thank you very much.
Morning, everybody. My name is Joe Tan, come from Royal Capital Asia. I am the investment director of the company. My company specializes in gold trading and target client mainly in the mainland China. And we have extensive exposure in the mainland China, so we have much more development chance and opportunity over there. And this is a pleasure for us to join this conference. For now, this is first time for my company. So thank you very much, everybody.
Good morning, everyone. My name is Jeff Wilkins, founder of Think Liquidity. We're kind of a new player in the technology field. My background is primarily FX, CFD, commodity, OTC, so off-exchange stuff. I want to thank Steve for moderating the panel, and I want to thank you guys for coming, and I look forward to this discussion.
All right. Thanks, panelists. I think we could just jump right into the first question. And Mr. Agarwal, you kind of touched on the growth in India. What have been the key drivers of the growth in India? Why have we seen these volumes? What's going on there?
As I said, in last 5 years, if you see the commodity trading has really gone up. One of the main reasons for this is that we had last 5 years as very bad years for equity market. There was a global crisis, there was risk aversion happening, and some of the commodities like gold and silver, they are a natural hedge, they are a friend in bad times. So we saw a lot of huge turnover in these kind of commodities. And commodity also emerged as an asset class. Never before people realized that commodity as an asset class can also give that kind of return. In last 5 years, gold has given kind of 20% annualized return. So the commodity has come to be recognized as an asset class. And another good thing about commodity is it is a tangible asset. Unlike stocks, which are a piece of paper, where the value can even go down to almost nil. But commodities always have a tangible value. So, and another thing is that even in a falling market, unlike stock markets, where every stock if the market is falling, most of the stocks would tend to fall. But there are so many commodities, and every commodity has its own individual dynamic. So one commodity, even if global markets are down, it does not mean that all the commodities would be down. There would be many commodities which would be going up. So taking a long position in commodities, even in bad times, can be a reality. So if you see in last 5 years, though there was a crisis in the global market, but the consumption that still remained buoyant. I think Asia contributed quite significantly to that, and one of the major contributor to this commodities demand was China. So overall, in last 5 years, the main driver of commodities trading had been another thing which I want to mention is that in last 5 years we have seen the advent of many exchanges. you have to reach to the people, you have to reach to the investors. These exchanges, they made the access of the trading platform accessible to investors, accessible to the traders. So even the technology, if I talk about algo trading, the sophisticated technology, quant-based trading, technical trading, algo trading, all these things also help in to a great way in increasing the turnover in commodities.
Thanks, Mr. Agarwal. Let me go to you, Mohsin. What do you see as primary drivers of the growth in commodities in the last?
I think I agree with Dr. Agarwal on certain points. According to me, I think commodity has been boosted by a shift out of the other asset classes, especially, as mentioned by Dr. Agarwal, equities and commodities for diversification. But at the same time, the growth in the BRIC countries, which is Brazil, Russia, India, and China, has significantly added to the boost of commodity trading. I think the OTC broker like us has given a different angle to the commodity trading because the ease of trading on an internet-based platform actually has increased the number of active traders in commodity. And China definitely has added a lot of value because if we look to the overall growth scenario of China, we'll see that there's a lot of infrastructure going on in China, hence giving a boost to the metal and energy. In India, there's a lot of significant development going on. So there's the commodity is increasing. I think as an OTC broker, we add a lot of value in terms of trading in a way that, yes, there are a lot of commodity exchanges in the local countries, but I think the competition has becoming more intense day by day, and I think the way we are adding value to the commodity trading is completely different because we are offering highly competitive prices to the retail and the institutional investors to come and trade. I think that's the key driver.
Okay, so you're saying the main drivers were the growth in the BRICS economies and the technology has enabled more players to access trading in those markets?
Yes.
Basically. Okay. Mr. Tong, what's your view?
I think we should have look back into the financial crisis in 2008. After the U.S. financial crisis, every country have some package sent out to deal with to prevent any recession. We know that China has launched a 4 trillion RMB as the economic stimulus package. And they have a very loose monetary policy at the time. And they put the money supply from 15% and double into 30%. But we know that China has a not quite efficient banking system. So many capital outflow from the banking system looking for investment chance, investment opportunity. And we found that the Chinese gold has a long history for them to invest and to consume. So that we found that when the capital outflow from China, they easily look for commodity like gold. So we see that gold has jumped up about almost 2 times in these few years. I think that's why the gold has a so big jump in these past few years. This is the main reason. That's because the China outflow of capital.
Okay, thanks, Joe.
I would tend to agree that the growth is driven by OTC brokers allowing additional leverage over exchanges. That's been a key driver, and then based on what happened in 2008, I've had the privilege of making markets in equities, FX, and commodities. And there was a lot of equity exposure out there in 2008, and I started to see investors transitioning out of equities and investing in more stable products such as gold, and then day trading oil as well, because of some of those swings with leveraged investments, you can make a lot of money or lose a lot of money, obviously. But gold has just been a very stable product over the last forever. I mean, if you look at a gold chart, you can day trade it, but if you're not long, you're in the wrong direction.
Okay, well, thanks for that. We'll go back to you, Mr. Tong. You talked quite a bit about gold. I know Jeff mentioned it as well. I mean, why has gold been so popular with the Chinese and perhaps the Indians? We can talk about that in a minute. But why do you think gold has been so popular with the Chinese money? Joe?
I think there is a civilization in historical reason. According to the history of China, many festivals and like New Year and wedding ceremony, they need gold as a traditional gift from the groom to the groom. That's why they have a good demand for this kind of festival. And for a long history in China, gold is some kind of money in the sense that they do transaction like that. So, of course, this is one of the functions of gold in the Western country, Western civilization, and also the Eastern civilization. But this commodity is a quite long history in China. So there's a great demand. Of course, their idea is focused on gold, but when they have money in their pocket, they put the money in gold saving and for the jewelry consumption. That's why they're so popular in gold investment for the Asia.
Thanks, Mr. Agarwal.
To add to what my colleague has said, in last 5 years, if you see, for the first time, central banks of various countries have become the net buyer of gold. Till few years back, they were net sellers. And for the first time, we are seeing that central banks have started buying gold. Another thing is that India is one of the largest importer. In fact, they are the largest importer and also consumer of gold. The love for buying gold is actually deep-rooted in Indian culture. In fact, there are days which are considered to be auspicious, where every Indian family, they want to buy gold on that day. It is Akshaya Tritiya and Dhanteras. So, and even in our customs, like in marriages, gold is given compulsorily by every family to their daughter who is getting married. The reason is that gold is taken as a friend in bad times, and gold can be worn on your body. And since it is, because in India, the ladies, the females, they were, the thinking was that if they are in crisis, if they run away from home because of some reason, they can wear gold on their body. So, India they have a natural love for gold. And we have seen that India has been consuming almost 900 tons of gold every year. And I believe that there is an estimate that more than 18,000 tons of gold is lying with Indian households. But this is the official figure. But unofficially, because in Indian temples, we have read earlier also that a lot of gold was found lying in Indian temples. The value was in billions and billions of rupees, billions and billions of dollars. So this was one reason that when there was a global crisis, there was risk aversion. People, they wanted to keep money close to them, or they wanted to put their money into an asset which is a good hedge against inflation, which is safe haven buying, which can protect, whenever dollar depreciates, if you see gold value appreciates. So it is a good hedge against the currency fluctuation also. So I think all these reasons have made gold very popular, and with these exchanges coming, with CFD, OTC contracts coming, I think access to this platform was also made possible and people could buy. And another thing which is very important, if you go to rural India, they have no avenue to invest, where to put your money. They don't know, even the banking is not very developed. this is the only means they know that if you have savings, India is a big saver. You know, more than 30% of our GDP is being saved every year. And that saving ultimately goes into, most of that goes into gold, because gold is, they think that gold is, the investment in gold has always given them good returns. And that has happened not even in last 5-10 years, it has happened since centuries. So that is why I think gold has become very popular, not only in India, even in China, as my colleague said. There is a, you know, that even worldwide, there is that perception that gold is a safe haven buying. It is a good hedge against inflation. It is a good hedge against currency fluctuation. So, and I believe that this love for gold will continue forever. Thank you.
Bill, do you want to add something?
Well, I will add to this what Dr. Agarwal has mentioned out here. I think gold is very much culturally attached to the Asian people, especially when we talk about India and China. It is considered as the safe haven. And as we see that there's a lot of economic development going on in these countries, especially India and China, we will see that the wealth of individual person is increasing in India, and hence the people land up buying more and more gold. I think the reason being that there's a lack of confidence, I will say that in the banking industry, where people believe, especially in India, that if they put their saving in a bank account, they will probably get 7 to 8% return on it. And what happens if the rupee gets weakened? So they prefer to hold a tangible asset, I think, and that's where the gold plays a very important role, because people tend to buy more and more gold. And again, as Dr. Agarwal mentioned, that in India especially, people do buy a lot of golds for weddings. And if we see the statistic, the demand of gold in India is 32%, China 20%, Russia and Africa is 13%, Middle East and Turkey goes to 8%, and others 15%. So it clearly says that the demand is increasing day by day in these countries. Thanks.
Okay, well, it sounds like gold is a safe haven and deep-rooted in culture within the Asian markets.
It is an alternate way of investment, actually, and definitely it's a safe haven for all the Indian consumers.
Well, let me ask you, if gold, I mean, gold has done nothing but go up, and you can't seem to lose with investing in gold. What if gold was, say, $1,000 or $800? Would gold still be appealing to the investors, or would people be bailing out, or would people stop getting married because they're waiting for the price of gold to go back up? What's your view on that if gold were to go lower?
If the gold goes low, I think people will be buying all the way down, and still people prefer to hold gold. That's the psychology of the Asian consumer.
Very well.
Well, I don't know whether people who have bought gold, they would be happy or not. But I'm sure if gold comes below $1,000, I think everybody in the whole would go to buy gold. And not only they would buy ETF, they would buy physical gold. The physical buying of gold will definitely increase. And we have seen in past also, whenever gold has taken a hitting, the bounce back happens quite fast. So if gold comes down, say, $1,000 or say $800 per ounce, I think that would be a wonderful opportunity. That would be a godsend opportunity, though I believe that it will not happen. But even if it happens, I'm sure that at least I will go, not myself, I'm sure that everybody will go and buy gold.
All right, sounds like the gold storage businesses want to get into. Joe, what do you think if gold were to go to $1,000? Would there still be interest in the Chinese market?
To me, gold is a safe haven. It's a safe haven when some crises appear, like a political crisis or financial crisis. In the past, we have a gold in a very high price. At that time, we say that $800 is a very high price, but now we are over $1,000. Why this happened? I think that it cannot be explained only by cultural reason or by jewelry demand. It's only caused by other abnormal reasons, like the financial crisis, in the US, in European country. But the other reason is that the demand from the mainland China. The fear of inflation is much more than what figure reflects. For now, we have figures like 4 or 5% per year of inflation in China. But actually, in the normal life, the Chinese feel that it's different, a totally different feeling in the price go up. That's why they rush out to get some chance to obtain quite high return to cover the inflation fee, like gold. Of course, when gold price go up, more cash rush for gold. But when something happens, it go down again. At the time, like no more crisis, everything go to normal. I think that what they expect the crisis expectation will go down, will cool down. And that means when price goes down from the current price, about 1,600 something, go back to down below 1,000. I think that the crisis appeared in gold market, not from the other side. Everyone sell out the gold. In that case, I don't think that just at 1,000 is a good price to buy, but below that. Of course, we have another analysis how I feel about the gold price. Let's discuss later.
Yeah, we'll get to that near the end when we'll look for your predictions. But Jeff, what's your view on the gold at half the price? Is the demand still be there?
You know, if gold goes down to $800, there's going to be a lot of unhappy people. You know, because typically any book of business that I've seen over the last 5-10 years is 70%, 80% long gold, and then outside of that, there's day traders that go long and short throughout the day. Any other commodity, oil, you see a $3 move in oil, and everyone's short. You see a $3 correction, everyone's long. So gold is one of those products that if you have all of your eggs in one basket and there's a big correction, there's going to be some trouble. So hopefully investors are diversifying with gold and not just using it as their primary investment vehicle.
Okay, thanks. Mr. Agarwal?
Here, I would like to add one thing. See, while deciding whether to buy gold or not, you know, what I really look at is whether the rate of interest is net of inflation, whether it is negative or positive. Till you have a negative rate of interest, net of inflation, it is time to buy gold. The time it becomes positive, I think it is time to sell gold. So it is also to be seen whether what kind of scenario we have. You know, having said that gold is a good buy at less than $1,000, it can be a good buy even at 1,800. It all depends on what situation, what point of time, what are the various macros. That is also very important. But the fact is that till you have a negative rate of interest, the fancy for gold will remain. And another thing, the gold prices will come down only when you have a lot of prosperity in the economy, when the risk aversion is not there. And if that happens, people would have more money. And where that money will go? Some of that allocation will go into gold. So I strongly feel gold prices are not going to come below $1,000. Of course, we can be happy thinking that once it comes down, and if you don't hold gold, I will buy gold at that point of time.
Okay, thanks very much. Jeff, you alluded to it a little bit earlier on, was volatility. Are you seeing the volatility in commodities attracting certain types of traders, pushing certain types of traders out of the market? How's the profile of commodities traders in volatile markets?
That's a good question. Volatility drives day trading. Typically, you know, in any instrument you see people sit and hold, but volatility picks up, and specifically in leveraged investments in the OTC market, people are looking to make money quickly. They're looking to, buy or sell on a correction and double their account, or, look to buy long into a rally and really capitalize on these movements. So as volatility comes and goes, volume comes and goes, but really the key is the guys that stick around have good risk management strategies. They're willing to cut their losses, and they're willing to, ride out winners, but, call it good at a certain point. Don't look to double your account in a couple of days. If you're looking to do that, you're going to be in trouble.
Jeff, doesn't TradeNext have a risk program?
Pardon
Doesn't
me?
your product have a risk program?
Think Liquidity?
Yes. Oh, sorry.
Yeah, our risk engines are built for people to pass through flow if they want to A-book, hold on to risk if they want to B-book, or anything in between, so you can do partial hedging. The company is actually formulated by a group of risk managers, and we have development people that work for us, but the whole focus of our company is managing risk on OTC flow, anywhere from FX to CFDs, and we're going to be in spread bet and binary as well.
Do you see the increased volatility increasing the demand for risk products?
Yes, absolutely, absolutely. Just the organic growth that our company has had over the last 6 months, without really any marketing dollars, has been incredible, because brokers want to manage risk on trade flow. And right now their options are A-book or just B-book. And that's a bit of a scary situation to be in. And obviously if you can run a hybrid model on a book of business and have some A-book, some B-book, and some C-book, which is in between, then you're really going to maximize your revenue as a broker.
All right, thanks. Joe, what's your view on the trader in a volatile market? Are there more traders coming to the market? Is the profile of the trader changing due to volatility?
I think that a volatile market alert people on that financial product. Like when we have a volatile gold market, everybody notice the gold news about gold and tries to trade on gold in the media. And for Hong Kong, we know that gold is very volatile in these few years. And actually, a new product was launched in Hong Kong because of such kind of volatile market, like gold ETF. The first ETF, a gold ETF, was launched in 2008, just what it began, commodity boom began. And now we have 4. And besides, we have a silver ETF, we have platinum ETF, and palladium ETF in Hong Kong. So the market is growing, and this kind of new product can be launched. Tell us that when the people are looking for new trading opportunity, they can accept new kind of trading method market. In the past, many people trade on OTC, gold OTC trading on the position taking. But now there's many frequent traders coming. They look for a trade on 7 minutes, 7 seconds. Of course, this kind of demand lead to some more improvement about the trading platform, high efficiency, more liquidity. That's what is happening now.
Higher volatility generally is accompanied by higher volumes. I think most of us who are brokers here, they would love volatility. The market is volatile, we'll have more volumes. We have seen, we have actually done a study of MCX, and we have seen that whenever there was more volatility in crude prices, the turnover at exchange went up substantially. But having said this, excessive volatility is also counterproductive. So if the market is vibrant, market is volatile, it is good for us, because volatility means there would be large moves. And whenever the market is more volatile, as you rightly said, the trader's profile changes. You have to adjust your trading strategy. You got to be more depend on more sophisticated tools, the technical tools which can take care of that volatility, or the general investors who invest into commodities. Maybe for them, like if you invest into gold or silver, maybe ETF is a better route. So the experts, they tend to trade more, they tend to take advantage of this kind of volatility, whereas a general investor generally loses in this kind of volatility. But from our broking perspective, we need a vibrant market, we need a volatile market, not very excessively volatile, but we need a vibrant and volatile market. Thank you.
Okay, thank you. Mohsin, do you want to add to that?
Yes, I think volatility certainly have changed the profile of the active traders. I look at it from two angles. One being a member of the future exchange in India, and other angle is an OTC broker based in UK. So if there's a volatility, what happened, for example, if a broker is trading on the local commodity exchange, the type of technology that has been used in the local exchange is not very fast compared to what we are offering as an OTC broker. When there's volatility, everybody just wants to buy, just go and buy on the trading platform. Being an OTC trader, I think the one-click trading works very well because everybody just go and keep on buying and keep on buying and selling, while the price movement just goes up and down. On the other hand, in Indian market, if we see if people are buying gold on multi-commodity exchange, the leverage and margin is not that great compared to the OTC market. And I think if somebody is buying a gold in multi-commodity exchange, 10 ounces of gold, they are paying 8% as a margin. While if they are trading on an OTC product, they are paying 2% and they're getting leverage on it, on top of it. Top of it, as an OTC broker, we are also offering a lot of risk management tools which help people to cover their losses, to minimize their losses at the same time.
Okay, thanks. It's our next question really about the OTC market offering, say better trading conditions, better liquidity than listed products. Is that the case? Are these compelling factors that make OTC more attractive than listed products? Are you seeing more interest in OTC?
It has certainly become very, very attractive these days because I think, as I mentioned, the profile of the traders are changing. Everybody wants to, whenever there's a volatility in the market, people just want to jump and straight away buy. I think Jeff probably add more into it as an OTC broker. I think the leverage and margin is playing a significant role for trading these days. And and that's the reason we have given a lot of competition and challenges to the local exchanges. Being a member of the exchange, I can see that there's a lot of difference between being a local exchange member and an OTC. Traders and profiles, the profile of the traders as people are trying to take an advantage of putting a minimum money and taking a maximum leverage on one particular product.
Jeff, I wanted to go to you next on the OTC. Is it more of an attractive alternative to the listed based on some of the things that Mohsin is saying?
Yeah, I think there's definitely some pros and cons. On exchange, you have a trusted, regulated source. Funds are held, they're protected. So in the OTC market, it's important that you choose a broker that has a good reputation, and they're in a good jurisdiction, whether it's FSA, ASIC, wherever. It's important, to trade with an unregulated OTC company is scary because obviously there's issues with funds being held. But what I find attractive in the OTC market are, if you walk around the room next door, some of the tools that are coming out, some of the indicators, some of the charting, some of the social network, all that stuff that's coming out for the OTC market is very attractive to a retail investor. So there's definitely pros and cons, and I honestly think there's healthy competition and enough volume to go around.
Also, I think there's so intense competition going on in the OTC market. I think if you figure out in terms of spread, I mean, everybody's offering tighter and tighter spread in the OTC market. And if it goes to leverage, yes, people are offering even different leverages. So definitely, I mean, OTC market is adding a lot of value to it.
Do you think instead of being competitive, it could be complementary to listed?
Yes, I do.
Jeff, do you think that the OTC would be complementary rather than competitive, or a little bit of both?
Yeah, absolutely. So in my past, what we would do is we would do price discovery from the exchanges, and we would be able to manage and warehouse particular flow that we saw fit, and then flow that we didn't want to hang on to, we passed right off to the exchange. So it's a good risk management tool. You know, and some brokers are passing flow off to larger brokers, and those larger brokers in turn are connected to the exchange. So they definitely complement each other in a lot of ways as well.
Okay, thanks. A couple of you alluded to other venues. For example, we have the Hong Kong. I hate to beat gold to death, but it seems to be a relative asset class. We have the Hong Kong Merc which launched their gold product. The Singapore Mercantile Exchange with their gold product. Thailand just launched a gold product. Of course, Tokyo Tocom has gold. China Gold. Are there just too many venues offering gold? Is the market too fragmented, or can the industry support all these different venues trading listed gold products? I'm not sure which one of you to ask. Maybe I'll ask you, Joe. What do you think? Is there too many venues for trading listed gold in Asia?
I expect that in the past, OTC trading is quite popular. Our client accept just the OTC trading is okay. But for recent year, they demand more, and they need the broker to be some member of the exchange. I think that they demand confidence behind exchange. Give them confidence, like their financial background and their risk control procedure, and of course, many OTC trading do not need any physical settlement. But to the client, they think that if you have some physical settlement behind, they know that your company is quite concrete, so that they have more confidence. That's what we see in the client.
Okay, Mr. Agarwal, do you think there are too many venues with Dubai Gold and MCXX offering gold everywhere?
The potential of commodity trading is very high, and it is only a recent phenomenon. In India, before 2003, there was no national commodity exchange. In fact, it was banned. So, in seeing the potential, even now, the physical market of commodities in India is almost $400 billion US. And generally, the average multiple of future trading is generally 15 to 20 times. Taking that as the base, we are still 50% of what the turnover should be. So it clearly says that there is a lot of potential, huge potential is there in commodities trading, in commodities future markets. How to harness that potential? Either the exchanges have to reach to the people, to the traders, to the investors. Of course, MCX has done a great job. To tell you, they are present in 2,300 cities of the country. More than 275,000 terminals, trading terminals, have been installed at various places, at broker's office or at client's offices. So, but still, India is a vast country, and not only India. If you look at even Middle East, if you look at Asia as a whole, we will see that the commodity access to the commodity trading platform, though even OTC is becoming very popular, but still it is not accessible to many investors, many players. And secondly, the geographical need. You may have a contract, like in India we have a contract of crude, of WTI crude, and actually India is not using that crude. But since companies have exposure to crude, and as a surrogate hedging, they are hedging their requirements through WTI. So if the crude which is being used in India, if that contract can come up, say, by a new exchange, why that exchange will not have, participants? So India, the country is specific, geographical specific. Then there are also deliveries happening. Though future market is not a platform for delivery. It is not meant for delivery, but there has to be some delivery to ensure that the fair price is determined, fair price is discovered. So that is why we are seeing that we have an exchange coming up in Bahrain, we have an exchange coming up in Singapore, new exchanges are coming up, and we have seen that some contracts because these contracts are very popular, like gold contracts. So an exchange which comes up, say, with innovative products, they will not say that we will not list gold contract, because that is a contract which commands a lot of like lot of participation. Take an example of Dubai. They came out with a very innovative product, rupee dollar contract, because they knew this rupee dollar contract, there is a need, there is a great vacuum, people want to hedge, FIs they want to hedge, they don't have any way to hedge except going to the banks. So if you can develop a mechanism where fair prices are determined, say almost from morning till late night, and that is why DG6 has emerged as the 4th largest currency exchange of the world. So these exchanges are coming as per the need of the geography, as per the potential, and as they are coming out with innovative products. So any exchange doing all this, there may be a gestation period, but going forward, that exchange is going to be successful.
Let me put it this way. Being an OTC broker, I think we have, and I think most of the brokers in UK and US has created a lot of competition in many markets. And no doubt we are also an Indian broker. I have seen in the past few years that we have, as an OTC broker, started pulling a lot of business from Indian market. And what happened, there was an intense competition being created within the company. The government came forward and said, look, there are a lot of people are investing outside India with the OTC brokers. So there's a lot of repatriation of funds going out. In order to stop that thing, in order to retain back the customer and the money, the Indian government came forward with a currency derivative exchange. And they introduced 4 or 5 currency pairs to give a competition to the OTC broker, and that was dollar INR, dollar GBP, dollar euro. So I think this is one factor which is important. Second aspect is, no doubt there is a lot of demands coming up in every domestic market, because if you talk about the farmers, they are producing a lot of agriculture products. At the same time, they're trying to hedge their position on the local domestic market. And geography, as Dr. Agarwal has mentioned, economic environment, everything is changing, so there's more and more demand coming up in many countries. So there's a lot of exchanges are coming up.
Okay, thanks. I was going to ask you, Jeff, but we have less than 10 minutes, and I wanted to get the predictions from our panelists before we go to the audience for Q&A. So, Jeff, what is your predictions for the commodity markets in the short to mid-term? We won't quote you on it.
Okay, don't look a year from now and then look back to see what this prediction is. But I really see commodity markets and really all markets kind of finding their ground and stabilizing. Equity markets have obviously come back to where they were. But what's interesting is, when I saw money flowing out of equity markets into the commodity markets, in particular gold, equity markets are back, but the money has stayed in gold. So I think we have new participants. There's new players in the arena. So I see stabilization. Obviously, there's thousands of venues where you can access gold pricing now. So the competition is going to get tougher. But as far as pricing, I see stabilization over the next, really 5 years.
So Tom, what's your predictions?
And I don't think that equity and gold market is just like so competitive in that sense. In some stage, it can go up and go down at the same time. But for the gold bullion, we see that I will compare with the CRB index, the performance of CRB index, to predict the gold performance in the near futures. We see that this CRB index to reflect the commodity inflation that is at the current moment just within the range in the 2008, in the year 2008. But for gold, it has surged above more than one time. So it's quite overbought in that sense. In the 2013 and this year, I expect that as long as the state will adjust its monetary policy, it will stop the quantitative easing. In that case, when it happens, gold price will go down and end up and the overbought condition will end. In that case, gold price will go down. So I think that it won't be surprised it go down below 1,300, maybe down to 1,000 in this year, but at the lower half of this year.
Okay, Joe, thanks. Mr. Agarwal, if his prediction's correct, there'll be a lot of buying coming out of India, I assume. What's your predictions?
Well, I quite believe that 2030 seems to be a market for equities. Risk reversion is happening now in place of risk aversion, and that means that there might be some correction in gold prices and silver prices. Having said that, I do believe if there is a correction in gold and silver prices, even if there is a say 3 to 5% correction, gold and silver should be bought at those levels. I still expect around 15% upside in 1 year time in gold and silver, because in one's portfolio one should have gold and silver both, not one. They would act as a hedge against themselves also, because if industrial demand goes up, if economy does well, maybe it is silver which will outperform. And if anything wrong, anything bad happens in Europe, or if there's any bad news coming from US, I think gold will again outshine. So it is gold as well as silver which should be held in the portfolio, not maybe at this point of time. If there is, I am expecting some correction, but at correction one should buy gold and silver, and maybe you put 10 to 15% of total of these two bullion metals.
We are running short of time. I will just quickly.
No,
add
go
to
ahead,
it.
Mohsin.
It's difficult to pinpoint any one particular commodity at this stage, but definitely there's a lot of talk going on about silver in the market. And I think silver is the next lucrative investment for many traders. And I think it has always been followed by platinum, because if you see, platinum has consequently been down by $100 to gold. And but the public perception about the platinum is always being expensive than gold always. So my view definitely is the next point probably people are looking at silver.
Okay, thanks very much. So we have price stability here, the possibility of gold going down if China's quantitative easing eases, 15% gold up, and silver is the hot commodity for the next year or two. Looking at our MC, looking at his watch, I'm not sure if we have any times for questions from the floor, or we should just wrap it up.
We have time for a couple quick questions. Anyone?
Anyone have any questions for our esteemed panelists on the commodity space?
We have one.
Well, this is for both of you. How do you see the difference between the local market and your OTC exchanges in future, rather, you can say? There's a big leverage and margin differences. Is it going to bridge up in future, or is it going to be the same?
But he's saying that the OTC market and the local domestic market in India, what will be the future? I mean, are the central bank going to open the doorways to facilitate, the Indian customers? Yes.
Well, the position of regulator is very clear. They want even OTC, the products which are being traded on OTC exchange, OTC, I mean, even those products to be traded on exchange platform. The counterparty risk in India, Indian regulator has got an opinion that we should not allow OTC market, the kind of CFD market or spot markets to function the way it is functioning outside India. However, I believe that OTC is a great product. Of course, there are pros and cons, but the CFD contracts, the way it is accessible to investors, the way the spread has come down, it is really helping investors to access this platform to take advantage of commodity trading. And though we could not do OTC trade in India, we ourselves have started our office in Dubai, and we are going to launch OTC, say CFD and forex spot contracts in Dubai. So of course you can't. I mean, regulators are regulators. You can't really do anything. But it is a great product. It has got its pros and cons. If you are dealing with a quality, with a high net worth market maker, I think the platform is good. I think it is the future of these products are also very bright.
All right, thank you. One last question before we break to the next panel. Over here.
Hello. Hey, Joe, I would like to know more about the China market, the Navigo trading. You just mentioned the traditional factor about why gold is so popular in mainland China, but why Navigo is also popular in mainland China?
Because, as I mentioned sometimes, it's the cultural reason for the Chinese customer. The other main reason is that for now in Hong Kong and in the global, we have an efficient platform for them to trade on. They can easily place their order in the market, and of course we have a reputable company to serve them and provide good service to them. So that I think that the Hong Kong gold broker has so many opportunity to explore more market in mainland China.
All right, thanks a lot. I'll just quickly thank Mr. Wilkins, Mr. Tong, Mr. Agarwal, and Mr. Jamil. Thanks for your time and insights today on today's commodity panel.
Thanks so much, Steve.
Thank you, gentlemen. Thank you, gentlemen. Just 1 second. We have a photo request. Obviously, one of you guys is famous. I don't know which one. Just one moment. It's just one person that's going to come up. And then, please bear with me, ladies and gentlemen. Then we're going to progress quickly into the Google presentation.
Let me quickly introduce the guy who's sitting on my extreme right. He's Mr. Jagjit Singh. He's the main founder and director of the TradeNext Limited. And we want to just share a quick news that we are now converting into a financial service group, which is a Bombay investment group where all the companies will be tagged along.
Ready? All right, good. Thank you very much, gentlemen. Thank you very much.